Guys, welcome to another video. In the last video we were discuss about the income statement. In this video we are going to discuss about the balance sheet and the interest calculation and loans ratios. So first we are going to discuss about the balance sheet. So what are the assets for the investment bank? Is the cash and due from the banks, deposit with the banks, federal funds sold, security borrowed, trading assets and the securities are there. Then we have the loans for the particular assets and the allowances for the loan losses. Then we have the net loans, or we can have a look on that. Like these are the net loans for the particular assets. Then we have the accrued interest and AR, premises and the equipments are there. Then we have the goodwill, mortgage servicing rights are there, other intangible assets are there, and the other assets are also there. So these are the total assets of a company. Then we have the liabilities. Let's say deposits, federal fund purchase, commercial paper, so the other borrowed funds, trading liabilities and account payables, beneficial interest, long-term debt rate, or the junior sub-debentures are there. Then we have the shareholders' equity. It's a preference shares or the preference stocks, then common stocks. Then there's a capital surplus, retained earnings, accumulated OCI, restricted stock units, and treasury stocks are there. So, and the total shareholder equity is also there. So this is something like that. Then we have the total liability and the equities, shareholders equities are there. Then we will discuss about the drivers. So cash deposit is a range about the 5.4% of the total deposits. Then we have the 3% growth for over the year. Then in this case bank deposits as well, we have the growth around the 25% over the year. Secured, borrowed and securities, we have the growth around 30%. Then we have the trading assets growth, it's around the 10%. Then we have the accumulated interest and AR loans, it's a 9.5%. Then we have the MSR originated MSR percentage growth, so it's around 5% over the year, it's growing. Then we have the other intangible amortizations, etc. So 1428, etc. And the other assets growths are there. So these are 360 and 5% are there. Then we have the liabilities. It's a loan percentage deposit, commercial paper of the loan, other borrowed funds, trading liabilities and trading assets, AP and other liabilities, and long-term loans are there. So it's a 55%, 8%, 4%, 37. 27 is a 40. Then we have the total assets and increase in Fed sold and increase in Fed purchased. So these are the numbers for that. Then these are the numbers for the interest calculations, like the interest rate for the different parameters of different loans and assets. Deposit with bank, federal bank sold, security borrowed, trading assets, securities, loans, and other IA. So these are total interest earning websites assets. And then we have the liabilities as well. It's interest bearing deposits. And apart from that, the federal fund purchase, commercial papers, other borrowed liabilities, beneficiary interest, long-term loans, and long-term debts, etc. And the debt versus trading assets, IE assets, or apart from that, there's other borrowings and liabilities and borrowed funds, and average interest on IA or the average interest on IBL, and the interest rate spread. So these are the something that are working on the different parameters of the company. Then we have the interest income and the interest expenses are there on the basis of different parameters, or the on the basis of different interest rate expenses. That is the different one. Then we have the cash flow statement, or we can go ahead with the loans or LLR. So this is one, like it's a total market or the non-US charges, or US charges are there. Then we have the US recoveries and non-US recoveries are there. Then net charges off or something like that. Then we have the loans regarding to the non-US loans or the non-US wholesalers loans. The total loans are there. Then these are the different consumer loans for the home and equity mortgage, total loans and the loan growth rate, US wholesale loan rates, and apart from that, the US wholesale consumer loans are also there. The total loan number and the number of commercials are on the part of the different major criteria. So this is something about the investment banking model. We can discuss about the more, like what are the key parameters for any investment banking industry that can be grow on day by day basis. And apart from that, we can we will discuss the each and every aspect of the financial model that we can go ahead with the for the investment banking domain. We'll discuss the each and everything in a series. So for so stay tuned and follow the channel and subscribe the channel, like the videos for the full series, and to become the expert in the financial modeling and valuation.